Welcome to Plain Talk. Happy to be with you. We're going to be talking about cryptocurrency today. And I got to tell you, I'm kind of a nerd about this. I read a book called Cryptonomicon in 1999 by a gentleman named Neil Stephenson. And it is a doorstop of a book about crypto codes during World War II. And it goes up into using crypto technology for banking. And again, this was written in 1999. Which is remarkable. So sounds super nerdy. It's a better read than it sounds like, I promise you. And it's always fascinated me, this idea that we could use the internet and sort of ease these transactions and have these codes in place that protect the transactions. The one thing that I've struggled with when it comes to cryptocurrency is why we need it. The sort of people who generally need to hide when I think of people needing to hide their transactions, it's usually people who maybe aren't doing very nice things. And certainly we've seen cryptocurrency specifically be used in that way. So when the Bank of North Dakota announced that our state was going to be launching a stable coin called the Rough Rider coin, my first reaction was super cool because that's the science fiction nerd in me. And then the political side of me said, but why? And I like to think that I'm a smart guy. And I like to think that I can figure these things out usually on my own. And for the life of me, I'm not real sure what the point of this is. And I'm saying that not because it's not a criticism, because I'm sure there is a point. I'm sure there is a good reason we're doing this. And that's why we have our guest on, Don Morgan. He's the president and CEO of the Bank of North Dakota. Mr. Morgan, first of all, how are you? Second of all, have you read Neil Stephenson's Cryptonomicon?
I have not. I've read a lot in the space. I have not read that, and it's great to join you.
You should read it. It's fantastic. It is the literary foundation for cryptocurrency, if that makes any sense. But let's start. First question first. I think people understand what something like a stable coin is, unlike, say, cryptocurrency, where the value is kind of tied to the supply and demand reality of cryptocurrency, which makes it very volatile. A stable coin's value is actually pinned, kind of like how we think of how the US dollar used to be pinned to the gold standard. A stable coin works the same way, where it's pinned to some underlying asset that makes it stable. It's right there in the name. But I think the thing people maybe don't understand is why North Dakota banks need this.
Yeah, confluence of events. You're absolutely right. The cryptocurrency space up to this point, you haven't seen banking writ large kind of get into it in a material major way, right? Why is that? Because it's in that really kind of speculative asset, speculative investment, high volatility space. Really, the value is based on belief, right? Bitcoin, belief that there's a limited supply. Somebody said somewhere. Now, that belief has grown tremendously, and belief, has power. But banking has not got involved. Also, what's occurring is fintech evolution in banking. The fintech disruption of banking, continuing to move banking services into phones and handheld devices, with fintech apps, non-bank, companies and software systems, really kind of around the banking system. Then you have the Genius Act that gets passed at the federal level, which really carves stablecoin more definitively out of the crypto space and makes it more, I'm going to say, ready for banking prime time, right? Yes, it's tied to the dollar. Yes, it's tied to no more than 93-day treasuries. But even more important, it started the framework for audit requirements, for reserve, for permitted issuer rules. Now it's the beginning, right? There'll be a lot more regulation built out. But we looked at it as an industry and go, okay, now it's ready for banking prime time. So much that the major core providers are getting involved. Shortly after Genius, you heard FIS, Fiserv, Jack Henry, kind of the big three banking core providers in the nation announce, digital asset platforms and stablecoin intent. Fiserv is Bank of North Dakota's existing core provider. And at the end of the day, nothing much gets done in banking unless the cores are involved, because they're our core database that makes sure all the debits balance and everything balances, right? So you couple all that, Genius Act, fintech evolution, Bank of North Dakota standing up in the fintech space for our North Dakota banks and credit unions, and the cores getting involved. And that was really the genesis of the idea. Okay, now it's time to issue a North Dakota Rough Rider coin. But more importantly is the underlying transaction framework for banking, that blockchain enabled transaction framework. That's the major part of this announcement. It's just utilizing Rough Rider Coin as a mechanism to move into that.
So I think I understand sort of the difference between stablecoin and crypto, right? I mean, it's backed by a dollar. It makes a lot more sense to me than just crypto does. I mean, I've struggled with how do you mine for something that is not real. That's a whole nother show. But
That just
I'm
seems like it just seems like a video game to me.
yeah, but I'm sort of also with Rob with the what's the point? What's the use of this whole thing? And I talked to somebody in the banking industry 2 days ago, and I started out the conversation by saying, I don't want to be that old guy saying, this doesn't make any sense. Like, I want to get this. But it seems to me like this idea of using stablecoin, 99.9% of people are never going to use this, because if I want to use it at the gas station to buy gas, don't we also have to have a business who's willing to accept stablecoin as part of this? Like the actual like I get why a bank might want to be able to do more instantaneously money going back and forth, but to the average consumer, how does this affect their life at all? And like trying to wrap my head around like me, how will this affect me in any way?
I could tackle that. We'll start here. So a lot of the announcements you're hearing, so think Wyoming Frontier Coin, Circle has announced, many others outside of the banking industry. They're working on that end user merchant adoption. So they're trying, I think Wyoming Frontier Coin is up to 7 blockchains. They're trying to figure out that interoperability with the blockchains for that end user. So you can spend Frontier Coin at your convenience store or your gas station in your everyday life. If you look down the road, that's part of the continued fintech evolution that's occurring that, quite frankly, is starting to leave banking a little bit behind, right? All consumers want more in the palm of their hand. We see this as another step in that direction long term. If that merchant adoption takes off down the road, and it might take 10 years, but if it takes off, all of a sudden you've got tremendous amount of financial transactions and deposits leaving the banking industry. What we differentiate is, and why we're starting with the back end of banking is really, okay, we believe banking needs to get involved now for that long-term relevancy, to compete in that space, to save those deposits, to be able to offer, those value adds that a stablecoin, blockchain-backed, enabled, interoperable transaction system will offer. In simpler terms, banking had been on payment rails that are old and traditional. They were built in 1970. They're antiquated, and they were built before the digital age. This would be the first of its kind to begin to build a blockchain-enabled digital transaction framework for banking. That's really what we're doing here. That's the first use case. Now, once that's there, then the possibilities open up. Okay, can banks offer deposit accounts? Are there correspondent services that can be offered? The possibilities will be there, but if we don't take this first use case for banking won't have those possibilities. It will still be on the old payment rails and be at risk if merchant adoption takes off, of those payment rails being out here outside of banking. So we're really talking about the long-term relevancy of community banking and credit unions.
That makes a lot of sense to me, in that it's sort of we're developing it, the tools on the table now. How are banks going to pick it up and use it? We're kind of leaving that up to the market. Is that fair to say? Like this tool's out here, find ways to use it now. Is that what we're saying?
That's the idea, is to first, our deliverables for next summer is to develop a successful Rough Rider Coin transaction in the Fiserv Digital Assets platform with us and some pilot banks and credit unions in the state. That's our deliverable. Once we have that, then you can look, we as an industry in the state can look at, okay, what's the next use case? Probably more likely than not is those banks then offering a deposit account product that utilizes that transaction framework. So what are the value adds there? Well, you get instantaneous global settlement. You get 24/7, 365-day access. You don't have to wait for the bank to be open. And you've got currency on and off ramps. We got a lot of clients in the state, think large energy companies, ag exporters, manufacturers that are doing international payments, cross-border payments, and they're going to want that value. Our hope is they can find it in their local friendly community bank or credit union, rather than eventually finding it in Circle app or something along those lines that is outside of banking.
So this helps. I'm sorry. Just one follow up then. So this helps those banks, all of North Dakota. And by the way, I don't think people understand how central the banking industry is to North Dakota. We think of our state as agriculture. We think of it as energy. Well, banks. I mean, there's a reason North Dakota has a Bank of North Dakota. There's a reason why you look across our political landscape. How many people come from banking family? Senator Hoeven is from a banking family. The Stenjum family are in banking, and on and on. Tom Campbell, who's run for various offices, former state lawmaker, he's in banking. Banking is very central to the industries that are here. So this makes a lot of sense. But to be clear, Chad was kind of talking about a consumer orientated use. That's not what Rough Rider is for currently. Is that one of the plans? You said once it's sort of established and we've done some of these use cases and figured out, is there a day where somebody could be paid in Rough Rider coin or go buy groceries with Rough Rider coin?
Well, Chad's exactly right. That's going to depend on a lot of factors. The biggest one being how many businesses in the state are going to want to offer the ability to point of sale transact stable coin. That's a huge unknown.
What has to offer something that they're not getting from the dollar currently?
Well, but isn't one of the things they'll get is people not using their credit cards and not having to pay that swipe fee?
Well, so one of the drivers, and I think that's a big driver for like Frontier Coin and others, and I don't necessarily think they're wrong. They are also today, that point of sale machine is running on pretty old traditional payment rails, and the cost of that structure. So think all the bins and Visa, MasterCard and the banks and everything, and everybody's got a piece of that pie. Let's call it, $3 a transaction. With the blockchain enabled stable coin mechanism transaction framework, the costs are estimated at like a tenth of a cent. Now, will that all transpose into lower fees for the end consumer swiping their card? It sure could. I think everybody involved is still going to get paid somehow, some way, because, these companies have to survive. But I think it will be something significantly less than the 2.5%, 3.5% fees you're paying per swipe, just because the cost basis is much less. It automates so much. You've got the blockchain doing the bulk of the lifting. And so the productivity of all those intermediary companies supporting that payment rail is going to improve drastically.
So it seems to me like this is sort of a forward thinking, like it's not going to affect me right now as a consumer, but we know this technology is coming. We don't want every community bank, every national bank having their own sort of stable coin. That it seems like this is a role for the government to step in, set up this infrastructure so we're ready when this might be what the consumer is using at the gas station. But me as a consumer, it likely won't affect me for the short term, but it's putting in that long-term infrastructure to be able to do this stuff down the line. Is that correct?
You're spot on. It's the long-term strategic thought there, the immediate, available to consumers. There's not that immediate use case today, but there sure could be far down the road. And we say 10 years, but this space continues to speed up.
Right.
Every time we estimate, it shortened the time frame, right? So it could be 5 years. It really could. It could be 3. We don't know. I think we're looking at it as we need to get involved now. Now is the time for the banking industry to start getting serious about this. And that Genius Act was a threshold moment that, like I said, now really kind of made it ready for banking prime time.
One of the things there's a lot of things I don't like about cryptocurrency so far, in that to date, a lot of the people operating in that space have been not very credible. And we've certainly seen some of the scam. I'm not saying everybody by any stretch of the imagination, but it has enabled some abuse and some crime. And that's unfortunate. And so I like the Genius Act. I like that we're bringing this marvelous technology really in a lot of ways into the daylight so that it can be used in good faith in an accountable way. And I like that. And I think the long-term benefit is the cost of how hopefully will go down because it's more efficient. So slight swipe fees that, you talk to retailers and how they fight for those swipe fees and they don't, it takes a chunk out of what they pay. And then that gets built into the prices that you pay. So, this is really, really important. And I'm excited about it. And Don, I a little bit. I kind of don't mind the idea of some of these currencies competing with one another. I mean that's kind of maybe that's kind of like the libertarian in me. Probably one area where maybe I overlap with some of the Ron Paul people a little bit is, I look at the way the government manages, our monetary policy. I mean that's a whole rabbit hole we don't need to go down right now, but I kind of like the idea that these different coins are going to compete with one another a little bit. And then eventually the market's going to find what works here. That I find that really appealing.
And I think, from Fiserv's standpoint, they are the largest core provider in the nation. They have 48% of the market share, I think. Don't quote me on that, but that's somewhere in the 40s. And they've been very leading. They've been on the leading edge of kind of the fintech evolution, whether you're talking embedded banking, whether you're talking neo and digital banking and secondary cores, all the way up to now digital asset platforms to support stablecoin compliant with the Genius Act. And there's a lot of cores that are, moving in this space. But Fiserv, from our standpoint and us being an existing partner with us, we'd say, hey, you fit with us because you're leading in the space. I say that to say this. Fiserv's excited because we have the model we have in North Dakota. We have the Bank of North Dakota that already has relationships and lines with over 91 financial institutions. So Fiserv is looking at, okay, we can build this digital assets platform, make it Genius compliant with 91 financial institutions, or we can work with one that already, so it's a hub and spoke model. And then they're building it, it's going to be core agnostic. So it's not just that opens it up to affect all of banking, and they're going to make it interoperable, which means that this example that we're building, we believe is going to highly benefit North Dakota financial institutions. But then Fiserv can then take it to, the broader nation as an example. I got to ask the question, are you competing with the Fed? No, absolutely not. We think this could be a good example that could maybe merge up with the Fed someday in the work that they're doing to evolve, the Fed lines like FedNow and others to move into this blockchain enabled space and add that value.
So Don, I think on the same day that the Rough Rider coin was announced, the governor and others also introduced a program to help furloughed federal workers at the same time. And I think it's important that listeners understand when we're talking about federal workers, we're not just talking about people who are working in big buildings in Washington, right? We're talking about our neighbors and friends right here in North Dakota. I think both Rob and I absolutely love this program. I think it's the first time that the state has really stepped into this space in a great way. So can you talk just about what that program means? I think there's 7,000 federal employees in the state, something like that. And as this government shutdown continues to drag on, and I don't know about the two of you, but I don't see any end in sight with the two sides not talking to each other. What does this program look like for federal furloughed workers?
Yeah, the Industrial Commission really led the way on this one, and it was that idea that these are North Dakota, these are the people living next to you here in North Dakota that are severely impacted, and probably it's looking like it's going to be one of the longest shutdowns ever. Like Governor Armstrong says, and he's got that experience in Washington. The way you get out of a shutdown is a clean resolution. Well, that's already on the table. So where do you go from there? And I think that's a big question. But it was that idea twofold. These are North Dakota residents living next to you. And then we've got a lot of North Dakota military personnel that are incredibly impacted, which was a differentiator from prior shutdowns. Military personnel were paid, I guess, in prior shutdowns. This is one where, they're likely not to be paid. So that really was the impetus to drive it. And then, we've done a lot of disaster programs. We're standing up for now. We're working on a new farm financial stability for next year, given the stress on ag. What works is kind of us working backwards from the need, not getting in the way of what private market opportunities there are to solve this, but all filling gaps, right? So there's some good banks like Gate City that have a good program to help federal shutdowns. You got USAA, some of those credit unions, but there are some gaps. And so we targeted a program that could step into that gap, quick, short, 2% loan. We've got to charge some interest because it can't, otherwise we run afoul of the gifting law. And so, and that's our standard 2% that the legislature directs. We've got the Rebuilders program set up by the legislature to be used for, and at the behest of the governor. So really all the pieces came into place. There's 9,200 federal workers in the state of North Dakota. And our application window's open, and we're getting applications. So we think it'll work.
Tell us a little bit. I mean, some of it's such a chaotic situation in Washington D.C. So we're talking about if we make these loans to federal workers, remember the members of the military, and the Trump administration is talking about ending some of those jobs. Part of the certainty of this is that they're going to get paid back, but that's another thing that seems to be on the table is maybe they're not going to get back pay. So tell us a little bit about, and again, coming from a place that I think this is a very necessary program, but talk about the risks in that a little bit, in that if some of these workers they take out a loan and then they end up losing their jobs or they don't get their back pay, what's the risk exposure here?
Yeah. So the initial, the broad spectrum risk is most will, not fall into that permanently furloughed, or I'm not sure the exact term, but that assignment of that back pay, which is in law to be paid by the federal government, we assume that, we assign that a high likelihood of occurring. So the credit risk on that is low. There is the piece of, we don't yet fully have full knowledge of, all the individuals that, are on more of that permanent list, but we're committed and we're working with the governor's office and with our partners to get that list as quickly as we can as it comes out. So we can incorporate that into all of our banks and credit unions who are on the front lines taking these applications. It will not be a perfect science. It will be an imperfect science. But we forecasted various levels of, okay, if we miss and they are permanently, let go, and they've already got it, we factor that into our loss curves. And no matter what forecast we run, even if, the most drastic loss curve, it's still a very minimal financial impact to the bank. In other words, we can withstand it on our balance sheet, given our financial strength. And like the governor said, when he was asked that in the press conference, he said, this is all about balancing risk. And if you weigh helping military, helping our North Dakota residents through the most material shutdown ever versus a little bit higher credit risk that the Bank of North Dakota is still saying, hey, even if it's high, we can withstand it very well. He's basically saying, give me door number one. And I think he's right in that.
Don, are there limits to how much money folks can take out, obviously based on their credit history and all that kind of stuff? But is there a cap?
Yeah, we're not checking credit history on these because we're relying on that back pay and that automation, because we had to make this fast and simple and easy. Otherwise, it really wouldn't work given the speed. The amount will cover up to 90 days. And that's the max we can do, 90 days of your net pay. But it won't be fully advanced up front. It will be as each pay period comes. If the federal government's still shut down and it's your payday, you will get that net amount in your loan through your local bank or credit union. And then your back pay just bills when that comes in, that will pay it first. And then, you'll have that remainder money. So that's the way the system's set up.
And if I can ask one other really quick question, you mentioned the 2%. When I first heard this program, I was like, hey, why not 0%? You answered this, but I don't know that all of the listeners necessarily understand the gifting clause. So can you talk about why it had to be some amount of interest rather than 0%?
Yeah. So we as the Bank of North Dakota, we can't involve ourselves in the grant or the gifting. That's beyond our mission. That's more in other areas of the state. So we do structure ours as loans. There is the gifting clause that, has specifics around that. We can't go down to the 2% level because that matches up with our other legislatively directed programs. So think school construction, we help build schools at 2%, build infrastructure for municipalities at 2%. Loans and clean sustainable energy are typically at that 2%. So there's the matching up of why we chose that.
Don, thank you so much for your time. Fascinating subject matter.
Yeah, good stuff.
Really innovative stuff. And frankly, I mean, sometimes somebody who's ideologically skeptical of having a state-owned bank, this really kind of puts to rest, like, we can do cool, innovative stuff with this that really helps people. Either building sort of what I consider long-term infrastructure for our economy, the way we move money around, or just helping North Dakotans in a in a bad situation. So I appreciate you coming on and talking about it all.
Thanks, Don.